in gold.
Peter Schiff, I know you've been a long-time bull on gold as well as silver, and you pointed out to us the 52-week highs being reached in a lot of the silver minor names, such as a silver Wheaton, which we just showed on the charts. John Roque over at WJB Capital takes a look at charts. He says $36 an ounce is the next stop, according to the charts, for silver. Do you see that sometime soon?
Well, I don't know about the charts. I think silver prices are going a lot higher. You know, we still need to go about $1 higher to take out the high from March of 2008. I think silver is going to go ultimately $50 an ounce, $100 an ounce. I mean, who knows how high it's going to go.
What sort of time frame are you talking about? Because when you hear those sorts of predictions, it sounds sort of off the charts, off the wall.
It could happen very soon. It all depends, I think, on when you really have a collapse in the dollar. I think the dollar index, which is right now trading a little bit above 80, I think it's headed down to 40. Whether it gets there in 2 years, 3 years, I don't know. It just depends on when the world wakes up and figures out what's going on. I mean, the United States right now is completely powerless to prevent runaway inflation. We have set up the banks. We have the banks owning all this low-yielding long-term government debt and mortgage debt. We have the U.S. government leveraged up with short-term debt. Nobody can take higher interest rates. I mean, if the Fed had to raise interest rates,
relative value game, and is Europe doing anything better than the United States? I mean, what is your argument? Why should the euro currency, as an example?
Yeah, well, first of all, yeah, the Europeans are making mistakes. That's why the Swiss franc is at a record high against the euro. But I think we're making more mistakes. I think we're easier than Europe. And I think Europe is at least embracing, in principle, some austerity. We're not doing anything. I mean, we're talking about pouring more gasoline on the fire. We want more stimulus. We want bigger deficits. We're trying to encourage more consumption. So I think our approach is more radical. Meanwhile, if you look at Europe as a community, it's a creditor nation. They have net exports.
Peter,
we're a debtor nation.
Peter,
yes.
I want to move the ball around here. Joe Terranova, are you a buyer of gold?
Well, Melissa, I've been a buyer of gold, but kind of let's get the folks to where the puck is going on this one. I think now when you look at gold and you look at silver and you look at the opportunities towards the end of the year, you begin to now ask yourself, am I going to get more bang for my buck in a copper name, a name like Freeport-McMoRan or even oil? So what I am looking to do in my gold trade is look for the exit door and increase my holdings of Freeport-McMoRan and oil over the next couple of weeks.
Steve, you got to trade on the Freeport-McMoRan as well.
I sure do. I'm long that name, and it's trading wonderfully right now. The price action is really terrific, and I have a chart to show, which is Freeport-McMoRan against MasterCard. And I think that this divergence is important. If you look historically, the two tended to trade together, and we've talked a lot on the show about high correlations, that everything's sort of traded together. Well, we're starting to see that break down, and there's some dispersion here that I think makes sense. And what I mean by that is Freeport-McMoRan is doing well because Asia is strong and demand for its products is strong. The consumer, though, MasterCard is breaking $200 today. MA is not trading particularly well. Higher prices are great for Freeport Mac. They are not great for MasterCard and for the average Joe consumer.
You definitely want to stay away from MasterCard. I mean, any company that's leveraged to the U.S. consumer. Remember, one of the reasons so many Americans are using MasterCard is because they're putting their food on it. They're putting their basic necessities. And I think a lot of Americans...
Hold on, guys. We can only hear one person at a time. Peter, finish your thought. We'll move the ball around.
I think a lot of Americans are so willing to use their credit cards because they're so far in debt, they know they're broke, and they might as well go out with a bang. I mean, a lot of people have no intention of paying back the money that they're using when they're using their MasterCards.
The other twist to a MasterCard and a Visa story is brought to light today by Bank of America Merrill Lynch, downgrading Visa to an underperform. MasterCard already at an underperform here at the bank, saying essentially the interchange fees, that's going to be a lid on both of those stocks. So not only do you have the consumer who may be tapped out, but you've also got regulatory environments, issues that could keep the stocks in a range. Brian Kelly, are you in any of these names? Do you think that there is perhaps a chance that a MasterCard, because 50% of the revenue is still international, so leverage to the U.S. consumer, but also exposure abroad?
I'm not in any of those names. I would say that China is as levered to the U.S. consumer as anybody else out there. So to say I would be a short seller of Freeport-McMoRan, although I'm not, and that would be my trade on that.
Yeah. So China is only levered to the U.S. consumer by their choice. They have more consumers than we do. They're working, they're producing, they're not loaded up with debt.
But
they have a much bigger market. They just have to turn it on, let the RMB go up, and they will. And, you know, we're levered to the Chinese producer. We're levered to the Chinese saver. If they take away their savings and their production, you know, they're removing all the props from beneath our phony economy.
Let's agree to disagree at this point, because certainly this is a heated conversation. We've got a lot of ground to cover in a 22-minute show. Let's move on to to the regional banks here getting a bid today. KBW saying that banks may be takeover targets. You got names like a PNC as well as a U.S. Bancorp who could be looking for an acquisition in order to juice up growth, especially as the yield curve starts to flatten and loan demand is simply not there. We've also got this report from our own Kate Kelly that Goldman's principal strategies traders are in talks with private equity firms to leave and take their hedge fund trading elsewhere. Joe Terranova, certainly there has been a lot of M&A chatter out there today. Lots of articles in Dow Jones, Wall Street Journal saying this is going to pick up. At the same time, do you think that you would be a buyer of any of these banks thinking that they are takeout candidates?
I do not own any of the regional banks right now. For you to own a regional bank, you have to believe that loan growth will increase. And if you look at last month's report, commercial loans actually did increase. So there is some cause to take a look at the regional banks. In terms of Goldman Sachs, it's a name I've talked about. It's a name that I own, 130 to 135. That is your support area. I think when you look at Goldman Sachs, look at it as simplistically as this. The momentum is now building, that a bottom has been found. It looks like the upside is where it is headed. And I think when you look at revenues that we're going to get reported here in October, they're going to surprise to the upside.
Yeah, it's a great place to work, but I wouldn't want to own their stock. You know, all the profits go to the employees. There's nothing left for the shareholders.
Sure.
Stay away from that stock. There's plenty of opportunities. You named some good companies. There are a lot of opportunities to own stocks around the world that pay good dividends to their shareholders. But stay away from these U.S. financials. You could use them as a trading vehicle, but I would be very careful because you don't want to get stuck with them when the music stops.
All right,
Thanks, Peter.
Let's move on and talk BP. Shares are higher today after saying a series of mistakes led to the Deepwater Horizon explosion. Bertha Coombs has just emerged from a 3-hour in-depth briefing by BP. Bertha is wide awake and she's got the very latest. Bertha.
3-hour briefing, a 200-page report, 235 when you add in the appendices, and essentially it is a breakdown of some of the engineering mistakes, 8 key areas where BP says there were failings that led to the Macondo well accident. What they don't say in the report is why some of these happened, and they also do not make a conclusion that any one party was responsible. They say that BP's teams were responsible. There's a lot of blame given to Transocean, which was the driller on this rig, and that they were responsible, according to BP, for testing the blowout preventer made by Cameron, which failed in this instance. So there's still a lot of questions even after all of this. But when we pressed them about some of the motivations, some of these issues that people have raised about whether there were corners being cut, Mark Bly, who led the team, said, while we didn't really go into that, there are no indications from what we heard from people that that happened. He admits that they weren't able to talk to a number of key figures, some because they were lost among the 11 people who died in the tragic accident, and others because they belonged to other companies and they weren't able to talk to them. Transocean, the drilling operator, essentially says that BP has done a self-serving report here that shifts a lot of the blame away from them and a lot of the blame away from the controversial single string design of the well. But Kent Purser, one of the members of the team, said, look, we have from our investigation seen that the leak was starting from the bottom of the well. So we believe that it doesn't matter if we had done a single casing or multiple casing string, that was not a factor. Back to you guys.
All right, Bertha Coombs, thanks so much for that update. We got to give some credit to Credit Suisse. Back on August 26th, they said that this report would be a catalyst for BP shares. BP shares are up about 3% in today's session. But take a look at this chart. This is our chart of the day. It is still down, the BP shares, that is 35% since the day of that well explosion. Peter Schiff, I know you were an owner of BP. Don't know when you got in, but at this point, do you think that there are further catalysts here? Would you hold on?
Yeah, I mean, I've owned BP shares in my own account for years. I mean, long before the spill, I owned a lot of other oil companies. It's just one oil stock of many that I own. I'm very bullish on oil. Yeah, I probably would have been better off if I got rid of my shares and bought them back, but I was not even thinking about it. I was running for Senate at that time. I wasn't really paying too much attention to BP. But I'm very bullish on oil, and I think prices are headed a lot higher. I think it's going to surprise a lot of people how high oil prices go. I think right now people are looking at the global economy and thinking that weakness in the U.S. is going to spill over into weakness abroad. I don't buy that. I think growth is real around the world, and I think inflation, unfortunately, is very real. Central banks are much too easy. They're printing much too much money. Prices for commodities like oil are going to rise.
Got it, Peter. You hear the music. We got to take a break.